Nassim Taleb, one of the most famous authors for a lot of economic books, Anti-Fragile, Skin in the Game. I'm gonna give you another list: Black Swan, Fooled by Randomness. I mean, these are classics that you need to know if you care about investing and if you care about economics and so on. And he used to be I don't want to say a Bitcoin fan, but he used to be someone who supported Bitcoin. Made a tweet yesterday where he said that he's selling his bitcoins because he just doesn't see any value in it anymore. And yeah, in this video, I want to comment on that and I want to talk about that. And I want to cover a bit on what's the value and how does this all work. So stay tuned, a lot of fun. Hey and welcome to this video. My name is Julian. On my channel, it's all about making you crypto fit. I discuss the beautiful world of cryptocurrencies, blockchain, decentralization, a lot of good stuff. If you're interested in all those things, you want to subscribe to the channel, you want to click the bell icon or subscribe to the podcast on LinkedIn, Twitter, wherever you're watching this. You don't want to miss any of that. Trust me, this is key stuff. If you're back for more, then hey, thanks so much. Click the upvote button, support the algorithm. Yeah, just by loving, liking, or doing all these things to help out. I do this stuff for free, so I hope you get a lot of value of this, and yeah, appreciate it if you support it a bit. Yeah, with this, let's dive right into the content, and let's maybe take a look here. Let me switch on the screen sharing. Yeah, I hope you see my screen here. So Nassim Taleb actually had this tweet and then retweeted it with a comment. So let's take a look. I've been getting rid of my Bitcoin. Why a currency is never... maybe first. Nassim Taleb, I mean, seriously, one of the best authors that I know. Lebanese American, Black Swan, Anti-Fragile, Skin in the Game, Fooled by Randomness. I mean, just these 4 books, right? They are so freaking, like, important, right? And obviously he comes from... He's a statistician. He did a lot of, like... yeah, these bell curves or like these tail curves, basically talking about risks and hedging risks. So yeah, especially those 4 are, in my opinion, must reads. These are the 4 that I actually read. I think his very first one, Fooled by Randomness, got super popular. Black Swan, I think that's what really put him on the roadmap. And then obviously Anti-Fragile, Skin in the Game. I think all of them excellent reads. I follow him on Twitter. And yeah, so I've been getting rid of my Bitcoin. Why? A currency is never supposed to be more volatile than what you buy or sell it with. So obviously he's talking about dollars. You can't price goods in Bitcoin. In that respect, it's a failure, at least for now. It was taken over by COVID denying sociopaths with the sophistication of amoebas. To me, that's a bit of a weird angle here, to be honest. I don't know where that comes in, but I'll leave that out for now. Weird comment, just dead honest. The other problem Bitcoin protozoa don't get, so he's really kind of leashing out here at Bitcoin investors, calling them amoeba and calling them protozoa. So the appeal of a cryptocurrency depends on some opacity, its ability to facilitate tax fraud and money laundering. I found that was really incredible. That for him, that's where the value actually lies, right? In money laundering and facilitate tax fraud. Whatever. You can anonymize a gold coin by remelting it. You can rework a spoon. Bitcoin is more traceable than cash. And he's right. And it's called the Lindy effect. Sure. Bitcoin volatility is not dropping with time and a higher price, exactly what you don't need. Great. So, well, very strong words, very strong opinion by one of the great thinkers of today. And, well, my entire comment to that, and that's what I want to comment on. Big misconception. That was my retweet, also the reply. Got 58 likes, 12 retweets, so cool. Bitcoin is a crypto asset, not a cryptocurrency. And now comes the key thing, right? So value of anything. You need to understand this formula, actually. So this formula here is key. Value of anything is its utility multiplied by how many people need that utility, divided by the amount. So obviously, let's kind of break this apart. So value of anything is the utility, let's discuss this in a second, by the amount of people. Of course, the more people need something or want something, the more valuable it is. Sure. but also divided by the amount. So obviously the higher the amount, the less value. And a very good example is air, for example, right? Air has massive utility to everyone on this planet, right? Every human being needs air. So massive utility, everyone needs it. So you would think air is super, super, super valuable. The problem just is that it's all around us, and most of the time you have enough air, right? Only when you're suffocating, you actually know how valuable it is. So that's why it's difficult to sell air, unless in a lot of Chinese countries or cities, you see people selling these air bottles, right? Or you can suddenly buy compressed air when you go diving, right? So suddenly then it is valuable. So it's a very, very key fundamental formula, right? What's value? And I think most people don't understand that. So if you look at cash flow analysis, right? A discounted cash flow analysis for stocks, it goes the same route. So it asks, what's the utility of a company? Well, it's very simple. It's basically, as an investor, you want the cash. The utility of that is very high because you know what you use it for. A lot of people need it, and cash should be rare. That's also why, right? So let's kind of understand that. If cash becomes a bit scarcer, obviously companies that are cash flowing are quite interesting versus those that are not cash flowing, depending on if they need a loan or don't need a loan, right? So this formula is super, super, super essential. You will understand one thing though. It's not so much about the absolutes here, right? Because in investing, it's not about constant. It's actually the delta. It's actually the change, right? Because that's what you want. Remember this. If you have a value today and it's constant, right? It doesn't change. That means utility stays the same, the amount of people that need it stay the same, and the amount that is around stays the same. Most people will agree on its value, right? So that's why, since everyone around in most places has enough air, even though everyone needs it and it has the same utility, the value stays the same and it's pretty much zero. As soon though as the amount of clean air goes down, so it gets smaller, the delta goes down, immediately the value goes up. So it's the delta, the change of this, that is so interesting, right? And so now let's talk about Bitcoin. And Bitcoin, the amount in Bitcoin is stable, right? It's going up slightly, but we can calculate that, right? So that's where stock to flow comes in. So that thing is quite interesting from a standpoint because Bitcoin is scarce. I want to tell you though one thing. It's quite irrelevant in that formula because it is so predictable. So the only two things we need to ask ourselves is utility times the amount of people that recognize that utility. And remember one thing, utility always means it solves a problem. That's utility. Anything can be useful, but it needs to solve a problem. And usefulness can be anything. It can be fun, it can be healthy, it can give you more money, but it has to be useful, right? And we can define what useful is. So now let's discuss this, and especially the delta of it. Now Nassim does one major mistake here, and that's just my opinion. He focuses on the utility aspect, and his utility aspect is that of a currency. And so he calls it a cryptocurrency and says it needs to be used, it needs to be spent, it needs to be able to money launder, it needs to be able to avoid taxes, it needs to be opaque, it needs all those things, otherwise it doesn't have utility. And this is where I completely disagree. I actually think the utility of Bitcoin has been there, and I discussed this in my book, Cryptocurrencies Explained Simply, in 2016 already, and I got highly criticized for that because I called Bitcoin a crypto asset back then. Today, people see this all around. They see this digital gold. Back then, very few people did so. So the key aspect, at least for me, is that utility actually is not changing in Bitcoin. Anything on top of the store of value asset, and anyone that denies the storehold of valuability in Bitcoin either is ignorant or thinks way too short term. Now, agree, anything that is very, very interesting has high volatility. It is how it is, especially if it's very emotional, if it's difficult to price. It has short-term volatility. But the long-term volatility is actually very small. It's a very excellent storeholder of wealth. So to me, the utility for Bitcoin is as crystal clear as it can be. The utility is a storeholder of wealth. And it's the major difference. So in Bitcoin, right? So if my entire investment philosophy to Bitcoin is that utility stays, it doesn't get better, it doesn't get worse, right? So I'm not a person who needs Bitcoin to be spent. I'm not a person who believes Bitcoin needs privacy features. These are all things that increase the utility. Is not my investment thesis at all. Zero. Like, that doesn't go into my pricing model. If you read my book, you will actually see my entire pricing model is based on that formula. But now it's the trick here. Utility is stable, and the amount I completely ignore because I believe it's already priced in, right? Everyone prices in, not exactly 21 million because that's like way too far into the future, but let's say everyone prices in 19 to 20 million Bitcoins, right? And it's super predictable. So that is the entire thing. But now here is the very big difference. Yo, Ivan, what's up? You need to do a video here as well on Nassim. Maybe you have. Sorry, I've been with my son today, the entire day. You probably have already. So here is the major difference. And I really want you all to understand that. It's the amount of people that, in my opinion, is the major delta in the value of Bitcoin. That's the key part. The key part that I believe why Bitcoin over the next 5 years, 10 years is going up like crazy is not because the utility is going to be so massive. It's not because the amount of Bitcoin is going to go down. Well, maybe people will lose Bitcoin. So great, right? So the amount's going down. Maybe the utility goes up, but it's not my investment philosophy at all. It's purely on one thing, that the old people die and the young people, they will prefer digital storeholder of wealth than physical. That's the main reason why my entire investment thesis for Bitcoin is so strong. Because I know so many millennials, so many Gen Zs. I'm part of this group. And whoever I talk to, they're like, yeah, gold is all cool, but you know what's really cool is all this digital stuff. And I know another thing. The old people will die before the young people. That's why my investment thesis for Bitcoin is so incredibly strong. If there's no black swan, Mr. Nassim Taleb, as long as there's no black swan, you didn't mention a black swan in this, right? As long as there's no black swan, this entire Bitcoin investment philosophy is a done deal. Because utility doesn't have to change and the amount is not changing. So it's all about the delta of new people understanding the value of Bitcoin. And that to me is so shocking in the entire thing that Nassim Taleb here says. There was another really good quote, and I wanna show this. Where was this one guy? He had such a great quote, actually from Anti-Fragile. Here, you should read Anti-Fragile. Great book, right? It's his own book, and he's so right. There is no long-term stability without short-term volatility, and that's just freaking shocking, right? That Nassim Taleb actually writes this book and discusses Anti-Fragile. He doesn't mention like anything that he actually wrote in there, right? Skin in the game, Anti-Fragile, fooled by randomness. Like, he doesn't mention any of those concepts. He could have mentioned the black swan concept, right? He could have gone and said, look, guys, I totally get it, it's digital gold. I totally get all this. And I get that the formula here, the same formula, right? Value, what's value? I get all this. But there's the possibility of a black swan. And that's why I'm selling. No one could have said anything there, right? No one could have said anything against that. Everyone would have just had to sit there and say, crap, he's right. Black swans are possible. He is the guru of all that. And that's why he's selling. Like, it's going to be very difficult to argue against that. But he comes from such a fundamentally wrong place of argument. And to me, that's just shocking to someone who normally is so strong in arguing and so strong in his fundamental thesis. It's just, to me, that was shocking, right? And I don't know what got into him. Maybe he had a bad day and all of that. And that's a bit of the reason. But to me, like, makes zero sense from a fundamental standpoint. I love listening to smart people, right? If a Ray Dalio, if a Bill Gates, if any one of those has a negative or a positive opinion about Bitcoin, to me, what I love to learn is the way to reason, right? The way where to pick up the facts and the numbers, the behind the scenes, and pick this up and then to say, okay, listen, guys, based on this, that's why I'm selling, that's why I'm buying. And if this makes sense to me, right, I have no problem with all of this. I literally have no problem that Warren Buffett thinks that Bitcoin is rat poison. I have zero problem with that because I understand where his entire philosophy comes from. I don't agree with it, but at least he's completely consistent in his reasoning, right? Completely. Like, he hates gold, he hates anything, he doesn't see any value in anything that doesn't cash flow. Fair enough. It's debatable, but it's fair enough, right? He doesn't like gold, he doesn't like Bitcoin. I'm fine with that. Even though I don't agree with the conclusion or with the fundamentals, but he is spot on with his consistency. Nassim here, my goodness, I really don't get where he's coming from with all of that. And to me, he is as wrong as he can be, first of all, with his fundamental facts that he uses. They are useless, and then the conclusions go against anything that I've learned from him. So to me, that's just shocking. I hope he needs to reread his books. So Nassim, I doubt you ever watch this. If you do, reread The Black Swan, reread Anti-Fragile. I think you're gonna sit there and you're gonna be like, crap, I'm wrong. And I'm totally fine if you admit you're wrong, or at least pick better reasoning, right? If you come in and say Black Swan and this, I'm all like, good, fair enough, right? There's enough Black Swans in Bitcoin, right? It can be a number up my sleeve, it can be but there's so many Black Swans. Why do you not pick one of those? Why do you pick the worst argument ever by discussing the utility? I think that's just absolutely insane. So, yeah, that's a bit of my entire take of this. Let me know what you think. If you're watching this on Twitter, retweet and tag Nassim and just tell him to invest 10 minutes. So, yeah. Do research. Oh, you got a script? I don't, Stony. Hey, hello. Hello. So, yeah, just do this. I think that's key. So, with this, guys, appreciate the time. Appreciate... yeah, you watching, give me a thumbs up, like, retweet. I would highly appreciate that. And then, yeah, see you next time. Thanks so much. Love you guys.